Okay, back with Expandable.
Good morning.
Morning. I got a good topic here today. What we want to talk about is, you're in the business of writing commercial loans. So, let's get back to the, this direct topic. We talked around it a lot, but this idea of someone getting a commercial loan for purchasing a commercial building for expanding their business. That's kind of the foundation of a lot of the things that we've been talking about here. And I wanted to look into this question of what should a commercial building do for your business, right? So if you are a business owner out there that is currently leasing and you want to buy a building, hopefully this will give you some ideas of how you should be thinking about utilizing that asset.
Yeah.
And so I would say, the first thing that comes to mind are businesses like service-based businesses that have inventory of products they sell, maybe on the back of a service. I'm thinking like an HVAC company, they have to order, they order in probably almost real time, but, companies that have inventory.
They got to stage some things.
Correct.
Meet employees in the beginning, workers, during
become
the
a
day.
depot of sorts, place for your equipment. So I think, if you are a service-based company, or even if you're a product company that's selling online, around the world, around the country, I think you have to look at your business and say, does it make sense for us to expand our footprint and own a building versus expand our footprint and lease?
So, right? What I love about financing commercial, when you already have somebody that's established and they're leasing, it really does come to easy, almost financial decision of buying versus leasing, because you got to think about it. Commercial property, for an owner to lease it, commercial property is the value of commercial property is how much it can generate in income. So you're looking at a percentage of that. It's not commercial property is different than residential as far as, primary residences. You've got so much emotion built into it. So, houses, when you look at appraisals on houses, they do by square foot, but they don't break down to really, they may have a little pluses for quality of construction or this, but generally they don't.
Right.
They're not real detailed appraisals. They're not giving great value for, if you've got a well to water your sprinkler system that costs $10,000 to get in, they're not giving you that $10,000 value on that,
right.
So, but on commercial, what is really great is, if you're already leasing a space, then that kind of builds you in that, if you've got the down payment, now you can kind of afford, and now instead of that lease money completely being gone, now if you're paying $3,000 a month that you were paying $3,000 a month before, hey, now a portion of it goes to pay down the debt.
It becomes an investment in your business.
Correct. So now you've got two values. At the end of the day, you can have a value for your real estate to sell off, and you can have a value for your business to sell off.
Sure.
So it is fantastic. So those are really one of my favorite types of loans to do. There's a direct benefit. Yeah, they're established, they're leasing, and now they're going into a place. So now they get the direct benefit. Because, let's face it, a lot of small businesses are based on that one owner. And so they really don't have a value when they go to retire.
That's right.
Because they're working 80 hours a week at it. Maybe they're making a couple $100,000.
You're talking about a business that really requires them to be there. So that's not really sellable.
Yeah. Or it's not
maybe
sellable enough to, they're not going to make several $1 million where they can truly retire. So now you've got, they've paid down their real estate and then appreciation of the real estate. Now you're getting something. Maybe the business only sold for a couple $100,000 because of that.
Right.
But now you've got $1 million piece of real estate sale. Yeah. So it's great
and
for business.
You've utilized your business in a way to help you build this asset for retirement. And I think that a lot of, businesses that have maybe been around for a little while and they kind of meet that criteria you're laying out, they may be thinking, okay, yeah, this makes sense. We should stop leasing, let's buy. But I think there's layers, right? There's more positive things that you should be thinking about to layer on top of that just fundamental asset building, equity building investment. And for those, I think you should look into your business and how it works, right? How does your business work? How does your, how do you lead your team? How do you manage your inventory? What are all what's the functionality of your business, and how can you optimize it so that your business grows, your business is more efficient, making more money because of this asset.
Yes.
Right.
And when you do own it, I mean, obviously you're not having to go, get approval from your landlord to, move around some electrical and, simple things. But yes, you need to get the approval of the landlord in most cases. So,
yeah. So what are you doing right now? I guess is the question that comes to my mind to this person. What are you doing right now that could be more efficient with a new space, and how would that work, which is going to dictate the kind of space you're looking for? What are you doing right now that would actually increase your revenue? And, one idea would be, well, we sell this widget, but we can't sell this other one because we don't have the space for it, or we don't have the infrastructure, to where we could build in for the machine that allows us to make the thing that goes with this thing. We have, 100 customers that if we went back to all of them, we could sell them this additional thing. So our business could grow by 20% next year just by going to our current customer base, but we can't do it because we're limited. Those are the kind of things I think are.
And my first thought, even before you get to that, is, the location. How far away are you having to commute to get to work? How far away your employees getting to get to work?
Yeah.
And then
that's a great point.
The access of, if you're in a service, how quickly can you deploy to get to your customer base?
That's right.
So, a lot of those things are going to come into fact. And, is it industrial park? Is it an older,
do you have a separate office right now and you're using your current lease space as a depot for your team to run and gun out of? And the new space could allow you to combine a lot of those things. So now you have less overhead.
And then time,
time, what they used to call it in sales, windshield time, like the time that your employees are driving to work and from work to customers' houses or commercial sites. All that is money.
Correct. And even, depending on how your employees are paid, maybe they're not paid till they clock in, but
mileage,
that's in the back of their head.
Mileage, yeah. The wear and tear on vehicles, maintenance.
Yeah. You could get a heck of a deal on a piece of property, 10 miles out, but by the time you're paying everybody's,
that's right,
gas bill, that 10 extra, you got 5 employees, that 10 extra, there's 50, and then back, there's a couple 100 miles a day because of your location. And just because you got a great deal, you just ate up, what was it? I think IRS is like 66 cents per mile.
Yeah.
So, $100, 100 miles, $66 that it just cost you that day.
That's right.
That adds up very quickly.
Very quickly with multiple people, vehicles, maintenance.
And I don't think IRS gives enough, that 60 cents tries to build in oil, gas, wear and tear and all of that. But, probably it's really higher.
That whole point is great for people who aren't thinking about getting another space, but maybe watching this for another reason. Maybe you should be looking at getting another space that's closer to the business that is growing and expanding in a different area, different territory, so that you can minimize all those costs. I mean, that would be a reason to look for a building today. If you're paying $66 per one way per person, like you're on your way to minimizing costs by just having a location where they can start from.
So, it made that location that is an extra $500 a month that you're going to pay in mortgage payment.
Yeah.
Maybe it saved you $800 in fuel.
That's right. And maybe it's not a full on new location. Maybe it's a smaller space that only warehouses materials or equipment that your employees come to as a depot to pick up and drop off. It's secure, right? So you're not getting into a $1 million piece of property with the hopes that you expand in that territory. Maybe it's a $200,000 small building that allows you to maybe take baby steps into that territory.
And as a lender, you can really tell when a business has completely thought about why they want to buy this location. And they're like, say if they come in and they're like, yeah, this location is better for the following fact. I'm already paying this, even though it's X amount dollars more, I'm going to save here and here. I already have demand for expansion. I can't do. Here's expansion. They've laid it out. That makes a big difference right there.
That's right.
And, character building, financials, and lending decisions, especially, having those conversations, not with, it goes back to the community bank and the people actually
have
look at things and just, put it in the computer and you
Yeah.
you hit it or not.
So if this is you, in some form or another, start having a conversation with Ryan or with, your local community bank and saying, what does it look like for the next 6 months, 18 months for the growth of my business? These are the conversations you really should be having anyways with a banker, financial advisor, tax strategist. You should be having these conversations about your business pretty regularly, because if you're looking at it and you're seeing how it's growing, then you want to make good informed decisions moving forward. And these sort of strategic decisions can pay dividends in the future. I mean, they increase employee morale because they don't have to drive as much in that scenario. They lower costs, they can lower and mitigate risk. It's not just about having an asset, right? It's all these other things that can go with it if you are being intentional about how you're growing.
Yeah. Let's face it, productivity of employees, if it's a, 8-hour work day in general, they're not going 100% 8 hours a day.
Yeah.
Nobody is. Let's face it.
Right.
So if there's intermittent things that you bettered them to where now it increased their productivity throughout the day, that can just speak volumes,
Yeah, for sure. All right. This was good. If anybody has any comments, please leave them in the comment section, and, like and subscribe on our YouTube channel. And reach out to us. Let us know if
what are your thoughts on commercial, moving your business, anything?
Yeah, does anybody have a story of doing this and it going really bad, or doing this and it going really well? We would love to hear all those things, because we'd love to talk about them.
Absolutely. And sometimes too, I don't think we hear enough of the bad stories that we can learn from to evade. We always hear about all the success of this, but
that's right.
Let's hear some of the ones that we can avoid.
Right.